Hi everyone, this is Lao Wu, and let's do the review for today. So look at the 5 minutes chart of this is yesterday, and which is actually last Friday. It was we can see it's first it was in like a wedge top, and then some kind of enter into some kind of trading range. It was a trading range open itself, and then it formed a wedge top, and then a pullback, and then some kind of a trading range, and then bears gave up and a small pullback bull trend. And this happens after a huge bull day on last Thursday. And we can see bears tried to reverse that but failed, and then both got their bull trend. And normally after a huge bull day, the buying pressure will decrease slowly, at least for a certain in the short term. Normally, sometimes both will accelerate up, but normally by climax there is going to be some kind of profit taking, and of course there are going to be some follow through buying, but overall the climax, the kind of buying pressure in the strong buying pressure in the initial breakout, which is last Thursday, will tend to slow down a little bit, and then market starts to get into kind of more of trading range price action. So the day normally, what I noticed is that normally the day after the big spike day, which is last Thursday, and then Friday, it will be better to buy low, sell high. See if you can look at this. You just buy the low, buy the big a doji bar, a good bull bar after some strong selling, like 1 and 2 strong bear bars and bull bar. Then you can buy here, and here same, almost always in short, and doji bar, bull bar, 3 consecutive bull bars, then you can buy. So that's because that's a sign of there are some follow through buying. There are bulls that they are buying, hoping the bull trend will continue. But on the second day after that, which is today, there will be more there will be more trading range price action. So the market will tends to basically more bears will come in, and more bulls will take profit, at least in the short term, and that the result of that is going to be more trading range price action. And at a certain time, the bulls and bears will decide whether it will break out down or break out above. Okay, let's start from the first bar. So first bar was the bull bar, but long tail, and it's a gap down, not that too big of a gap, but it's gap down, and the bull bar, long tail. So I think since the gap is small, more likely it's going to be closed quickly. So but it's big bar with long tail, so I think better wait. Bar 2 is a big bull bar, closed on high. It's good. And it seems both it's going to close the gap, but can you buy here? I think better wait. I would wait for 3 bars. 3 big bear bar closed on low, erased bar 1 and bar 2, and this is the bear breakout, and but possible trading range. So I think we need to see at least the follow through bar 4, how it looks like. Okay, bar 4 is the doji bar. We can see bear tried to break out, but it failed, and now it's kind of a double bottom. You can, for both, is a double bottom 1 and 4, or you can also say this is the wedge bottom from 60 from 70 1 and 4. You can say this is a wedge bottom. So could be a reasonable buy? I think so. I think after yesterday, like I said earlier, the buying pressure is going to decrease, but that doesn't mean it's going to reverse. That just mean there's going to be more trading range price action. In trading range price action, buy low, sell high. So since 4 is okay, it's a bull bar, right? It's a doji bar with long tail, but it still has a bull body, so it's a bull bar. So it's a double bottom. It's a wedge bottom, and this is a strong bull trend. So I think it's a reasonable buy. So I put this here. I think it's reasonable buy, and the stop will be below 4. Okay, 5 is another bull bar and tail, and if you didn't want to buy above 4, sorry, and you can wait for 3 consecutive bull bars, and there is 6 3 bull bars, though they are not very good, but you can see the bar size are increasing, the 3 consecutive bull bars. So I think above 6 is also a reasonable buy if you didn't buy above 4. It's 3 consecutive bull bars, and it's double bottom and possible wedge bottom after a strong bull trend. So it's I think if it's in the trading range, I think it's at the bottom area of the trading range. So it's a reasonable buy. 7, bigger bull bar, bigger tail, but bigger body. So overall, I think it's good for both. And both we can see bears. Some bears so below 3 they have stop here, and both ran their stop. That EMA. It's good. It's probably too late to buy here at 7, but if you already bought above 4 or 6, you probably can just continue to hold. And if you see a big bull, if you see a good bear bar, just get out and take the profit. Okay, 8 is a better bull bar. You can see the bull from 4 to 9. You can see the bar body at increasing. This is the buying pressure, strong buying pressure. Okay. So both will continue to hold. There is nothing to short as of yet. 6 consecutive bull bars. It's good for both. Continue to long. And 10, long tail. It's kind of a reversal bar, but it's a bull body. It looks like some bulls take profit right around here. Let's see if they got the merit move. We draw the merit move based on this. Yeah, we can see both got the merit move about the size of 3. I go this way to get there. Yeah, about size of the body of bar 3, which is I think both get there. Some bulls, if they bought this, then they bought here and they bought more, and here they are making a profit. Even both they just maybe bought above 6, they are making a good profit. So some bulls are taking profit, which also tells us that this might be a trading range, might be a bull leg in a trading range. Even 7 consecutive bull bars. Okay, 11, good bear bar close on low. I think both can take partial profit. 12, bear bar, long tail, close the bar of EMA. I think for both, you took partial profit. You can still hold the other half. For bears, I don't think 11 is a good short because 7 consecutive bull bars. So better wait for second entry short. 13, good bull bar. It's big comparing to 12 long tail, but it's bigger than 12. I think above 13 is a reasonable buy. You're buying for a breakout, you're buying for a merit move based on this. That would take us to here, right, above high of yesterday and high of last week. I think that's what both are going. They're going to want to trigger the high, the buy above high of last week, which is here. If you look at here, this is the weekly chart, and this is the high of last week, and it's a very good bull bar. And both is going to want to trigger that and see what's above, and bears is going to want to sell above that and make this the bull trap. So, but we'll always see what will happen is that what we have to see. Okay, 14 is a weak. It's a bull bar. It's a weakness. It's a bear bar. This is the weakness sign of both. Even they had 7 consecutive bull bars. This bar 14 is a bit disappointing for some bulls, because they should have got a good bull bar follow through bar like 13, right? They break out and quickly go above, but they didn't. 15, it's a bull doji, long tail. I think nothing to buy, nothing too short. It's a low too short, right? 11 is low 1 and 15 is low 2. It's low too short, but the signal bar is not good, especially 7 consecutive bull bars. So better wait. 16 is the bear bar. It's closed down, it's low, but I think better wait for another one. I don't normally like to sell a bear bar like this. It's not that big. It's a double top, but it's closed above EMA. It doesn't have a good signal bar, so I think better wait. If 17 is a good bear bar, then a big bear bar, breakout bar, probably you can short. Okay, good bull bar close on high. Both have double bottom, bull flag after this very tight bull macro channel at EMA. So 17 is the reasonable buy above, and you're buying this bull flag, and your stop will be below 13 or a 12. Okay, 8. This is the bull bar but smaller body and long tail. I think both can still hold long. You can probably move some of the stop below 17, and just in case it fails. Okay, it failed. Now good bear bar close on low, small tail, and we can feel that here at 14, both has already showed us the weakness of their buying, and the 19, actually 18 again is weak. They should have get a strong breakout bar, like big bull bar close on high on 18, but they didn't. The bears saw that, and they are selling, and some bulls are getting out. So good bear bar 19. So if you are still long, you better get out below 19. Yeah, even there are 7 consecutive bull bars. The problem is that we can see the bear bars are big. This is much bigger than the average bull bar in this strong bull leg. Okay, 20. It's a bull doji. It's bad follow through for bears, but is it a good buy? I don't think so. I better wait for breakout. I think both taking too long time around the EMA. It's a tight trading range, and it's taking too long time, because if both are going to get a strong trend today, a third strong bull day today, they need to get this price quickly above the EMA. Otherwise, more bulls are going to take profit, and some bears are going to short and betting for a reversal day. Okay, 21. We can see both get out. They saw the doji. They are very disappointed. They get out, and bears short. And so you can see even there are 7 consecutive bull bars. It doesn't really helped a lot. It's after both hesitate a lot around this area, and then they quickly get out, and bears quickly start to sell, and the bears trying to get reversed down, but still there are 7 bull bars, so more likely it's a bear leg in a trading range, less likely a strong bear day. 21, good follow through for bears. 22, good follow through for bears, trying to break out at the possible bottom of the trading range. So I think it's hard to short here. Better wait. Okay, now good. Okay, bull bar tail, possible trading range. I don't think this is this is a good buy. I think it's hard to buy here. It's 2 good bear bars, 21, 22. So better wait. For bears, you can short above 23, but possible at the bottom of the possible trading range. So I think it's hard. It's better wait. 24 is a bull doji bar. Now it looks like bears going to get their second leg. Okay, 25 is a surprise bar. You can see it triggered the sell below 24 and then went above. So this was a bear trap, and the 25 was a huge bull bar. So it's kind of surprise bar. And you can buy when it quickly moves up, or you can buy above it. I think 25 is a reasonable buy, even though it's still in the possible trading range. But one thing we have to see is that 25 is one single bar. I think that's the most important information that market is telling us. It's one single big huge bull bar that erased 21 and 22. To bears, this is a surprise. This is different with if 25 is not a big bull bar, it's an okay bull bar, and then 26, 27, let's say maybe three consecutive medium-sized bull bars. If that's the case, if that happens, then comparing to this, that's a weaker setup. This is stronger because it's simple, because both get to this price within one bar, not 2 or 3 bars. So this is the buying pressure, right? Bears did 22 and 21, 22. They thought both are going to. They thought this is the trading range. They thought both are frustrated. But now with 25, both is telling them, hey, not that easy, right? Not that easy. We are giving up. We are buying more aggressively than you were selling. 21, 22 looked big. Bear bar looked very bearish, and by 22, I think it's always in short. But 25 just one bar and it get back above 21. So that's very good buying pressure. That's I think 25 is a reasonable buy. And especially you can these 7 bull bars are still playing some kind of role here. Even you can see their influence are smaller, but their influence are still there. It's 7 consecutive bear bars. The likelihood of a bear trend is less. So let's see. Okay, 26 bear follow through for both, but could this be a trading range continue? 27, 28 bear bars? Yes, probably. If you buy above 25, what you would do? I would say, I think you better wait, right? Because 25 is a so good bull bar, and probably you can probably both will get at least a small second leg up. 27 is a bull doji. Both are trying closed above EMA. Okay for both so far. 28 it's a bull bar long tail and bull body. I think both need to quickly get above here. So if you bought above 25, I think if I bought above 25, I'll probably put my stop below 27, at least partial stop and below 27, just in case 29, 30 is a big bear bar. Okay, it is. So this is telling us that it's frustrating. It's confusing for both. So more likely in the trading range, and some bulls get out. They may still have some position holding, because there's still a gap here. There's still a chance that this will be a bull trend continue, because it's still above EMA after four bars. It's still above EMA. Okay, 30 is the bull doji bar. I think both will. If I'm the bull, I'm going to put my remaining stop below 30. I'll see how it goes. If it run my stop, then I take the loss. Okay, 31 good bull bar. tail, but this looks like both is going to want to continue the trend. Okay, 32 doji bar. Both need to continue to create consecutive bull bars. Bears need good bear bar. 33 bear doji bar. I think both can continue to hold. 34 good bear bar close down low. Now this is the macro wedge, right? This is a small wedge here. So this is hard now. I think you probably have to get out for both. Below 34, this is a tricky thing to do. For bears, is the reasonable short. I think it's worth to try, right? I think it's a reasonable one. Trading range. It's not that good, but trading range, possible trading range there. So there is a higher level of trading range, and you probably need a wide stop. 35 is the big long tail. This is the bad sign for bears. I think bears will get out above 35, and we both buy above 35. Some might, because we can see it went below 30 and then go and above, and went above and closed above EMA. That's buying pressure. So some bulls might take a chance and buy above 35. Okay, 36, good bull bar close down high, and bulls are buying. This could be a spike and channel, right? 25 is a spike, and then the channeling up. This is also a expanding triangle here. So expanding triangle, it's a spike, expanding triangle, or you can see this is actually a wedge bottom. First push, second push, third push. So the wedge bottom, and both want to go up. So if you look at that this way, 36 could be a buy. 7 good bull bar, second consecutive bull bars, 3 consecutive bull bars, always in long. Looks like both are trying to break out above this, and they want to break out above have last week to see what's above. 39 bear bar tail, small inside bar, not big. So after 3 very good bull bars, I think bears better wait. Both can continue to hold. 40 bull bar, it's okay for both. Have one buy, but previously this is the old trading range price action, buy low, sell high. So I don't think this is the very good buy yet. Better wait for breakout. Bear doji bar, inside bar, can bear short below 41. I think it's the bear body the bear bar is too small. Better wait. 42 bigger bear bar but long tail. The breakout above the 10 high is failing, but we haven't seen a give up bar yet, so better wait. 43 good bull bar close on high. It's becoming interesting. It looks like both want to really want to go to see what's above high of last week. It's 43 a reasonable buy above. After these 3 very good bull bars above EMA and possible spike and channel, yeah, I think so. I think 43 is a reasonable buy above. Even there might be resistance above, and you just take the chance. Your stop will be below 43. Okay, 44 doji bar, and you both will continue to hold their stop. Bears short. I think if they short, they need a very good bear bar 45. Okay, good bull bar 45. We can see both bar 44 and both trying to go up. Another bull bar trying to break out. 3 consecutive bull bars trying to break out high last week. 4 consecutive bull bars trying to break out. This is a spike. Now it's clear this is spike and channel kind of a setup. And it's also getting climax. We can see it's a parabolic. It's becoming a parabolic wedge, right? It's look at this. It's becoming a parabolic wedge. If I delete this, you can see this parabolic wedge, and earlier is the trading range for first half of the day is trading range, now parabolic wedge. So can it go very far? We have to see, but we have to be aware that this could be a bull leg in a trading range, and the trading range and on the open is a sign that this breakout may not go very far. But we have to see every bar, and because every bar bring us new information. Okay, bear doji. That's slow down buying pressure. Some weakness of both. Another doji bar. So 3 doji bars. Hesitation. Both should have quickly go break out above, but now they are getting 3 doji bars. 4 doji bars. At certain point, both is going to give up and they're going to take profit, and bears will start to short and taking a chance. This is a bull leg in the trading range, and it's a wedge. And now 53, both trying again. Okay, another doji bar, very small. We can see once it break out above high of last week, the buying pressures like disappeared, and there is no one seems to be. Not a lot of bulls are interested buying here. Okay, 55, good bear bar closed on low, and we can also see it went above 50, went above 54 and trapped the weak bulls, but above 54, and could be it's also a double top, and second entry short. So 55, you can, I think it's a reasonable short, swing short, and betting this is a bull leg in a trading range. Okay, also the timing is good. This is at 2 p.m. Normally, usually 2 p.m. will be the time that stock market starts a swing, either a bull swing, a bear swing. So timing is also good. I think 55 is a reasonable short. 56, bear bar, long tail, but still a bear bar. I think bears will continue to hold. 57, a bull bar, but what do you see? What we see here? It's a bull bar, it's a good bull bar, it's closed down high, but the problem is the body is very small. It looks very good since it closed down high. It looks very good, it's very attractive, right? But the biggest problem is the body is too small. So both bought above 57 is the you can see, is they the reasonable buy above 57? Yeah, if you look at this bull trend, yeah, this bull channel is probably may continue, right? You can see, you can try it. I think, I mean, everything is about probability. We cannot say this is 100% sure a good buy or not a good buy. It's based on probability. You can buy above 57. If you buy it above 57, you are betting the bull trend, the bull channel is going to continue. And there are 4 good bull bars above this, so you can buy it. But if you buy it, I think where is your stop? You probably have to put your stop below 57, at least partial stop below 57. I'm gonna mark this here. So I think it's okay. It's worth to try, right? Because your risk is small, below 57, but you need to know that this bar is not that good. It's very small and could be a bull trap. Okay, 58 bear long tail bear bar. It looks like bears are trying to trap the bulls, but about 57, but. I don't think it's good to short 58. Better wait for bears. 59, another weaker bear bar, long tail. Both are still trying to save this. Okay, 60, good bull bar close on high. I think this is a reasonable long. The second entry long, right? Both are trying to break out above. This is also break. You can say this is a breakout test above high of last week, and both want to go above. Now 67. When you see 61, what do you think? You think, okay, this is the more likely a bull trap. So you just get out. I think take the loss. And I think that happens. It's the cost of doing the business as a trader. So just get out for both. And now, is it a short? Second entry short. I think it's worth a shot. It closed below EMA, failed breakout of high last week, and wedge top, and I think it's a reasonable shot below 61, and it's 230. Okay, good bear bar close down low. Probably always in short. Doji bar. Big bear bar. I think clearly always in short at this time. Long tail. Nothing to buy yet. Looks like bears are going to want to reverse this. At least bears know this is the failed breakout above high last week. There are more sellers, which means there are more sellers than buyers above the high of last week. The bears start to sell, and bulls starts to take profit. 65 doji, very weak buying. We can see another doji, weak buying, and it's an II. So probably below 66, it's a reasonable shot, but it's a doji bar. I think we better wait. Okay, 67, good bull bar close on high. Bulls are probably trying to keep this like a trending trading range. This is the lower range and this is the upper range. That's what bulls are hoping with 67. But we'll see next. So, a very good bear bar close down low. It reached 67. What do you think? Both are saying, no, this is not going to be it's probably not going to be a upper range, and bears is very aggressive, and they are selling at EMA, and they're selling aggressively at EMA and high of last week. So short below 68. What if 69 is a good bull bar close on high? Just get out and take the loss. Okay, huge bear bar close down low. I think bears are shorting and bulls are giving up. Can 69 a good reasonable shot? I think there are still space below, right? 22 is a reasonable sell close, and bears is probably going to at least get there and test it, and it's also at the open. You can see, oops. It's also at the open, right? So I think bears is going to want to get to the open. And if you didn't short below 68, I think you can still short below 69. This is a very big bear bar, and this can be looked at as a surprise bar as well. And if we draw a merit move based on this could be a merit gap, and that takes us down to here. So the profit is not that small, not that good, but the probability is high. Okay, bull doji bar, weak buying so far, right? What if you just sold below 69 and you saw this bar? Since the selling, we can see one thing we can see is this: 55, 56, two bear bars, 61, 62, 63, 64. 4 bear bars and bar size are increasing. This is stronger than this. Now 60 and 69, big strong bear bar, even bigger, even stronger than this. So the selling pressure are increasing. Right now, when you see 60, when you see 70, what you have to think about is, are 71 going to be a big bull bar? And if it is the big bull bar, so 69 could be a exhaustive gap, and then you have to get out as bears. You have to get out above that. So can you take that loss? Are you able to accept that loss if you are bear? If you cannot, you better get out some short above 70. But if you think you can accept that loss, and thinking that the probability of that happen is small, you can probably hold your stop above 69. Okay, 71 is a bull bar, not that big, not that impressive. It's hard to, it's a hard one actually. I think you can get out, and if 72 is a good bear bar close down low, you just short again. It's what I would usually do. Okay, yeah, you get out. You can see it went above 71 and then closed at a good bear bar close down low. So you just get out. If you got out above 61, you can short again below 72. Now 73 big bear bar close down low, continue to short. 74 bull bar. Both are trying to stop bears, and they are. This is now they already have a. You can see this is a wedge bottom, but so far bear bars very good. All close down low, and the consecutive bear bars two very good consecutive bear bars. Another two very good consecutive bear bars, and overall is very bearish. So both are probably they get a reversal. It's going to be a minor reversal. We have to see 75 looks like. Okay, good bear bar close down low. Now it's at close 3-4 bars left, and you have to tighten your stop as bears. If you sold below 72, your stop have to probably above 75 now. Okay, bear bar, you just hold and trail your stop now above 76. And now above 77, and the last bar and below new low of day, you probably I would take some profit as bears below 4. I think there might be buyers here. Okay, now 78 for very good bear bars, and you just take profit at the last minute. Okay, 79. You can see 3 bull bars at the end and some profit taking here. Okay, this is the review for today, and we can see on daily chart today is the bear bar close down low, and it's a small bear bar comparing this to the last Thursday's big breakout. So tomorrow, can tomorrow be a let's look at this. Can tomorrow, if you look at this chart, can tomorrow what bears can do tomorrow? They can create a big bear bar close down low, like maybe like this day or this day, and then there will be a sign of trading range, and they I think more likely tomorrow is probably getting into some kind of a tight trading range, and then both will try again, and because Thursday was such a big bull bar, and it's and both is probably going to get a merit move based on the size of this big bull bar. All right, that's a review for today. And if you have any questions or suggestions, feel back to comments and below the video and let me know what you think, or join our Discord channel and to talk about price action in every day. And we trade in our Discord channel, and we talk. We have a lot of good traders here, and we do bar by bar analysis, and feel free to come to join.